Eric Wade from Stansberry Research says he found 3 biotech stocks that are about to explode as soon as Nvidia releases a new chip. If you invest in these 3 stocks early, you can make a lot of money, but there's a catch. Wade won't tell you the names of these 3 stocks unless you pull out your credit card and buy his newsletter. Lucky for you, I figured out which stocks he's talking about, and in this video I'll reveal all 3 stocks for free. I'll also share the pros and cons of investing in each company and its recent stock performance so you can decide if Eric Wade is worthy of giving stock recommendations. Make sure you watch all the way to the end so you don't miss any important information. First, I want to look at some of Wade's past stock recommendations so you can get a sense of his track record. In October 2019, Wade recommended 2 companies that he claimed would dominate in the augmented reality space. The first was Microsoft, which has since soared by 300%, far outpacing the market. The second was Intuitive Surgical, which despite some ups and downs, has climbed around 150%, nearly doubling market gains over the same period. Let's fast forward to January 2021, when Wade's newsletter brought everyone's attention to 3 digital currency investments. The first was Bitcoin, which has risen 50% since the recommendation, mirroring the market's performance. Next was Amazon, which, after a steep 50% drop, is roughly at break-even. Lastly, he spoke about DocuSign, which unfortunately has plummeted 80%. In January 2024, Wade picked his top 2 AI stocks. Alphabet, Google's parent company, is outpacing the market by about 6 points this year. However, his second pick, UiPath, has been a major letdown, causing significant losses for many investors who followed this advice. Now let's get back to Wade's new teaser. In this teaser, Wade mentions that all 3 stocks he's recommending are biotechs that will grow with the release of Nvidia's newest Blackwell chip. I'm going to tell you the name of the first stock in just a few seconds, but first I want to give you a free gift to help you in the stock market. Click the link in the description and I'll send you an issue of the only stock picking newsletter that I use and recommend. I'm literally giving it away for free, so just click the link in the description and I'll send it right away. The first of these stocks is CRISPR Therapeutics. CRISPR Therapeutics is a leading biotechnology company headquartered in Zug, Switzerland, founded in 2013. The company specializes in developing transformative gene-based medicines using CRISPR/Cas9 technology, a groundbreaking approach to editing genes. This technology enables precise modifications to DNA, offering the potential to treat a wide range of genetic disorders and diseases. CRISPR Therapeutics is at the forefront of this innovative field, with a robust pipeline of therapeutic candidates aimed at addressing serious medical conditions such as blood disorders, cancer, diabetes, and other genetic diseases. From a financial perspective, CRISPR Therapeutics is still in the clinical development phase for most of its pipeline products. In the latest quarter, the company reported revenue of $517,000, significantly lower than analyst expectations of $3.54 million, primarily from collaboration agreements. The company is heavily investing in research and development, which amounted to $123.4 million for the quarter, reflecting its commitment to advancing its gene editing platform and clinical trials. One of their flagship programs, CTX-001, developed in partnership with Vertex Pharmaceuticals, targets severe hemoglobinopathies, including sickle cell disease and beta thalassemia. Recently, CRISPR Therapeutics and Vertex announced promising data from their ongoing clinical trials, with patients showing sustained levels of normal hemoglobin and reduced symptoms, bringing them closer to potential regulatory approvals and commercialization. Investing in CRISPR Therapeutics offers several compelling advantages. The company's CRISPR/Cas9 technology represents a revolutionary advancement in biotechnology with the potential to cure previously untreatable genetic disorders. The promising results from early-stage clinical trials have generated significant interest and optimism within the medical community and among investors. CRISPR Therapeutics' strategic partnerships with leading pharmaceutical companies further enhance its research capabilities and market reach, positioning it well for long-term success. The company's valuation reflects high investor expectations for future growth and the transformative potential of its gene editing therapies. However, there are notable risks associated with investing in CRISPR Therapeutics. The biotech industry, particularly the field of gene editing, is highly complex and subject to stringent regulatory scrutiny. The approval process for new therapies is lengthy, uncertain, and requires significant investment, which can impact financial stability. Additionally, CRISPR Therapeutics faces intense competition from other biotech companies developing similar technologies. The potential for unforeseen scientific challenges or adverse trial results also poses a risk to the company's progress. The financial performance of CRISPR Therapeutics is influenced by its ability to successfully advance its pipeline through clinical trials and obtain regulatory approvals, which is inherently risky and time-consuming. So overall, CRISPR Therapeutics presents a high-risk, high-reward investment opportunity. The company's pioneering technology has the potential to transform the treatment of genetic diseases and create substantial value for patients and investors alike. While the path to regulatory approval and commercialization is fraught with challenges, the significant growth prospects and innovative capabilities of CRISPR Therapeutics make it a compelling consideration for investors willing to navigate the risks inherent in the biotechnology sector. Thorough due diligence and an understanding of one's risk tolerance are essential when considering an investment in CRISPR Therapeutics. The second biotech being promoted by Wade is Lonza Group. This stock is available for purchase on the Swiss Stock Exchange. Lonza Group AG is a Swiss multinational chemical and biotechnology company headquartered in Basel, Switzerland, and founded in 1897. Lonza operates as a key supplier to the pharmaceutical, biotechnology, and specialty ingredients markets. The company provides a wide range of products and services, including custom manufacturing of pharmaceuticals, biologics, and specialty chemicals, as well as cell and gene therapy development. Lonza's diverse portfolio and global presence make it a critical partner in the production of innovative and complex therapies, supporting clients from early development through to commercialization. From a financial perspective, Lonza Group reported revenue of 3.1 billion Swiss francs for the first half of 2024, reflecting a 1.8% increase on a constant exchange rate basis. This growth was driven by strong demand in the biologics division, which saw a 7.3% sales increase compared to the first half of 2023. The company's operational efficiency and strategic expansions have resulted in a core earnings before interest, taxes, depreciation, and amortization (EBITDA) of 1.9 billion Swiss francs, indicating a solid margin of around 30%. This profitability highlights Lonza's ability to effectively manage costs while expanding its service offerings. Additionally, Lonza maintains a strong balance sheet with cash and cash equivalents of 1.5 billion Swiss francs, providing the liquidity needed to invest in growth opportunities and navigate market uncertainties. Investing in Lonza Group offers several compelling advantages. The company's strategic investments, such as the announced 850 million Swiss francs expansion in manufacturing capacities, particularly in the biopharmaceutical and cell and gene therapy sectors, aim to meet the increasing demand for complex biologics and advanced therapies. These expansions are crucial for maintaining Lonza's competitive edge and addressing the growing needs of the life sciences sector. Lonza's stock performance has shown resilience and steady growth, currently trading around 546 Swiss francs per share, with a market capitalization of approximately 45 billion Swiss francs. This performance, coupled with the company's consistent financial results and strategic partnerships, has attracted positive analyst sentiment. Many analysts highlight Lonza's strong market position, diversified revenue streams, and potential for continued growth in the life sciences sector. However, there are risks to consider when investing in Lonza Group. The company operates in highly regulated industries, and changes in regulatory environments can impact its operations and financial performance. The complexity and cost of developing and manufacturing advanced therapies also pose significant challenges. Lonza must continually invest in technology and infrastructure to maintain its competitive edge, which requires substantial capital expenditure. Additionally, the competitive landscape for contract manufacturing and specialty chemicals is intense, with numerous players vying for market share. Ensuring continuous innovation and operational efficiency is crucial for Lonza to sustain its market leadership and profitability. The last biotech being pitched is Intellia Therapeutics. Intellia Therapeutics Inc. is a leading biotechnology company headquartered in Cambridge, Massachusetts. Founded in 2014, Intellia is at the forefront of developing gene editing treatments using CRISPR/Cas9 technology. This cutting-edge technology allows for precise modifications to DNA, offering the potential to treat a wide range of genetic disorders and diseases. Intellia's innovative approach focuses on both in vivo, inside the body, and ex vivo, outside-the-body treatments, with a robust pipeline aimed at addressing conditions such as transthyretin amyloidosis, ATTR, acute myeloid leukemia, and other genetic and immunological diseases. From a financial perspective, Intellia Therapeutics is in the clinical development phase for most of its pipeline products. In the second quarter of 2024, the company reported revenue of $15.9 million, entirely derived from collaboration agreements. This revenue figure, although relatively modest, was a significant miss compared to analysts' expectations of $18.6 million, contributing to a wider net loss for the quarter. Despite these challenges, Intellia maintains a strong balance sheet with cash, cash equivalents, and marketable securities totaling approximately $971 million. The company's valuation reflects high investor expectations for future growth and the transformative potential of its gene editing therapies. Currently, Intellia's stock is trading around $22 per share, with a market capitalization of approximately $4.5 billion. However, there are notable risks associated with investing in Intellia Therapeutics. The biotech industry, particularly the field of gene editing, is highly complex and subject to stringent regulatory scrutiny. The approval process for new therapies is lengthy, uncertain, and requires significant investment, which can impact financial stability. Additionally, Intellia faces intense competition from other biotech companies developing similar technologies. The potential for unforeseen scientific challenges or adverse trial results also poses a risk to the company's progress. The financial performance of Intellia Therapeutics is influenced by its ability to successfully advance its pipeline through clinical trials and obtain regulatory approvals, which is inherently risky and time-consuming. So overall, Intellia Therapeutics presents a high-risk, high-reward investment opportunity. The company's pioneering technology has the potential to transform the treatment of genetic diseases and create substantial value for patients and investors alike. While the path to regulatory approval and commercialization is fraught with challenges, the significant growth prospects and innovative capabilities of Intellia Therapeutics make it a compelling consideration for investors willing to navigate the risks inherent in the biotechnology sector. Now, if you found this video valuable and you want to diversify your investments beyond traditional stocks and bonds, I have just the thing for you. Even though I believe that investing in a low-cost index fund is the best long-term investment for the average Joe, the benefits of solid physical gold are hard to deny. I think of physical gold as insurance against unpredictable times, and I'm not the only one. In 2023, central banks added over 1,000 tons of gold to their reserves, the second highest annual purchase in American history. And in 2024, central bank got another 290 tons of gold in just the first 3 months of the year. If the biggest banks in the world are buying tons of gold, I'm sure there's a good reason for it. I found a company that allows ordinary Americans to own and securely store physical bars of gold as part of their IRA account. The best part is that they're giving away a free guide to teach you all about investing in solid physical gold. If you want to learn more about how gold can protect your retirement savings, just click the link in the description to receive a completely free gold IRA guide.